Hi everybody, my name is Adam Meyer. I am back with another video, and I hope everybody didn't get clapped yesterday when the news came out with Jerome Powell of the interest rates going up 0.75%. So that's 75 basis points. And basically what that means is that they're raising rates so jobs can actually come down and people stop spending money. Because people aren't going to stop spending money until they lose their jobs and see people around them losing their jobs too. And that's what they need to happen. They need inflation to go down. That's only going to happen with job loss and things slowing down in the economy and fear getting into the market. There's a whole bunch that does with the stock market and also the housing market, but people say it can't be timed, but my studying and watching other people and learning from them, this stuff can be timed and it is possible. We just need to wait for the U-turn of when the Fed finally does say they're going to stop raising rates so high and they're going to start focusing downwards, and that's when the stock market's going to go back up. But the housing market still should work its way down. It all depends on area, but overall the market still should come down because the rates are so high and people aren't going to be buying houses. Like for example, me, I want to buy a house. I've been wanting to buy a house like during the summer and get something built on my property, but it took a while to get a permit, and then the rates were still around 3%, but now they're up to like 6, 7. They're probably going to be up to 8 here in the next few weeks. And it's like I don't even want to buy it anymore. I don't want to put it on even if I can, because I don't want to pay that 8% interest rate, and that's going to happen with a lot of people. So that's going to force a $300,000 house to come down to like 280, 270, 250, depending on the area. But it's just the general psychology of the market cycles of everything. All assets should go down when it comes down to like real estate and stocks and crypto. Crypto is a huge risk, which is actually nice. I'm still expecting crypto to come down, but let's get into this here some more with an article. So this is something Powell said yesterday. Is very premature, in my view, to think about talking about pausing our rates, and that is basically the rate hikes. And he said that flat out. It caused the market to drop. There's also an algorithm that was going to drop anyway. But anyways, he was going to say that just so he can like make everybody realize they're not going to pause rates until they get inflation down. They're not going to say anything good. They need to see the numbers of the jobs coming down. Right now, we're not seeing that. You can still look over here at Forex Factory, and the job openings higher than expected, and that's not good. Unemployment claims, look at them, they're still lower than what they were expected. So they need to see this number go up, and they need to see this number come down, just so they can actually, bad news is good news right now. So they want to hurt the economy, and that's good news because it's going to lower inflation in the long run. And as soon as they start to see these numbers start to change, that's when they're going to reverse the entire market. So if we get here in the market here, this is still the tweet that I had from, I believe, August. Yep, August. And I was like, this could be the high of the NASDAQ, and this is the NASDAQ. It did peak up, and it's been coming down ever since, even the S&P. But those of you that follow me on Twitter, I was expecting maybe some type of movement here to reach up into this range to continue shorting. So now we're going to go more of like a trading aspect kind of thing of how I'm personally looking at making money. I'm not a financial advisor, but it's how you can also look at it and learn, and then you can make your own judgment if you want to put money in. But this is just how I'm looking at it. So I did expect maybe a bounce right here, and if we got a 0.5, so like a 50 basis point hike for the interest rates yesterday, we probably would have seen the market reach up into here, into this gap, into this drawn liquidity, because there's like a magnet up into this area, and I actually put it on my Twitter last week right here. So if we did reach up in here, this could be a draw on liquidity, but we started to break structure and then break into this low and hold down below, and that actually showed shorting potential. So the sellers were coming in with confluence of the bad news of 0.75. So you're adding it all together, and as a trader, you got to be able to adapt to the markets and not let your emotions get the best of you. Like you got to be okay with being wrong and then adapting and changing your mind. And that's what makes the best traders out there. So when we got the news yesterday, we came up and we swept all of these highs. So in the morning, it came down and swept all the lows. So these lows here and then these highs here. So in the morning, we came down below the lows. So everybody that was buying right here got knocked out. And then the news came out. Everybody that was selling got knocked out. And then it started to short to come down below these lows and also these lows here. And you see how this could act as like a support for a normal trader. Boom, they just come down and smoke them all and then goes right through. I was personally trading that myself on my account, so I took the shorts down there. I was waiting for everybody to get knocked out. I don't like to get in right with the news. I like to get in after everybody gets knocked out. But that was the general direction of having the news correlate with what the chart was showing. I was mainly trading based on what the chart was showing, not really what the news was. So that is an opportunity. I still have a position open to see if we can reach down here, but if we start to bounce around in this area, we could work our way back up. So if we get on like the bigger scale of things, I think we can bounce back up if we start to get good data. But if we don't get good data, we're gonna work our way back down, and we're gonna keep going down lower. Let's say a black swan event happens of like something big in the world, like a war that even starts and escalates even more, or something with oil and gas. That could actually cause the markets to drop a lot, because I think the market and the economy is on thin ice right now, and anything really bad and tragic could happen, could just melt these markets even lower, and that's just going to cause lower pricing for personally. I like it when it goes lower because I'm not looking to sell anything, I'm just looking to keep buying. I'm personally have my dollar cost average like the highest it's ever been in my life, so I'm actually buying more as it comes down, so I actually get happy when it comes down. When it comes down to like Bitcoin and crypto, it's all the same thing. People are asking me, do you think this is gonna, I'm gonna pull up the chart here. People are asking me like, do you think this is gonna go higher? Like when's the next bull run? And I don't think it's gonna happen anytime soon until the rates actually start to come down. It's going to correlate with the stock market. Bitcoin, I'm seeing levels down here around. Sorry, this is like a big mess with these tweets on here. Let me get these off. Oops, what did I just do? All right, let's just get that one off. So I'm seeing this whole support right here, and we see this gap down around the 14,000 to 17,600 or so. It's a big support with a big gap, so like that's gonna be hit. I think we could reach up into here, but even then, I don't even know if we're gonna get that. I'm like in the 4-hour time frame with the gap we're sitting at now. We're sitting at a nice gap that's sitting right about here, and this could just be our catalyst to start moving lower. See how we're hitting this gap above these highs? So we have this entire floor of money, all this floor of money. There's so much money down here. People are buying it, buying it, buying it. It's going up. And now we came up from everybody selling right here. We came up above them, knocked them out. We're hitting this gap to rebalance the market. And then now we could be reaching to smoke everybody out here, and we're probably going to free fall a little bit into this higher time frame gap in the monthly. So that's just like what I'm looking at there. I don't know if it's going to happen for sure, but you know, I'm trading it. I'm seeing it happen, and it's clear. It's clear to me, and we'll see what happens. You know, I'm not going to blow my account if it loses, but it's just something I'm watching and adapting, and I'm ready to buy as we come down lower and start going sideways. So it's depends on how you want to do it. Not everybody's a trader. It's not made out to be, but for long-term investment wise, I think we could get in a little bit lower, or at least I'm getting in a little bit lower. But in times like this, I think it's really great to start building up your income. For me, I personally passed the 20 grand funded account challenge. Actually, if I make that, here it is right here. I passed the 20 grand funded account challenge with my Forex funds. So I did that. So in this time, it's best to get up your income. So I'm using this. I'm trying to make about like 1, 2, but probably about 2.5% per week on this account. That's like what I'm aiming for. I want to get 10% a month on this account, and then funnel into other accounts, maybe like 100K account, 200K account, 300K account over the next few years. I mean, it doesn't happen quick. This took me about 2 years to get, and I'm looking to get farther on. So I'm learning, but I'm also getting other sources of income. I started another business with my girlfriend. I just keep going, trying to load up as much money as I can and do what I can to just funnel these into these investments that we can get going on, because this is, in my opinion, is like a life-changing opportunity to invest in the long term into your future. All right, I'm gonna go over a little bit of my trading strategy and how I actually won that trade that passed me the account. I wasn't gonna put this in the video, but why not? I'll put it in. So I was looking for, let's see the higher time frame. This is the higher time frame here. I was actually in the Dominican Republic in Punta Cana when I saw this trade. So I'm looking at the market setup. It came down overnight from here into this fair value gap on the higher time frame. I believe it was on a 4-hour, but in this picture right here, it was, here's the gap, that little gray box that you see right here. We came in, filled in the gap, and we had high here, high here, high here. See how there's all these highs with no poke up into them? And then we also had a gap up there. And just based on my experience over the past 2 years, I have trained my eye to learn this language of where the money and price should go based on algorithmic principles. So after the entire night of it just bouncing around down here, lower lows, it's stopping everybody out. Everybody buying down here is getting stopped out. So as you can say, they're buying here, stop loss below here, stopped out. Buying here, stop loss below here, stopped out. Then we start to move up, and I'm looking in this area on lower time frames because I see all that. Everybody's getting stopped out, But everybody shorting, they have their stop loss here. People shorting up here are trailing their stop loss below here. People shorting here have their stop loss above here. And then boom. So now I'm looking to see if we can reach up in. And this gap right here was my main target. I wanted to see price get up. Well, my main target's up here, but the low hanging fruit target was right here. And I was looking for price to reach up in there, and it acts as a magnet. So think about a paintbrush too. Paintbrush comes down, you always got to go back up. Think about it. It goes, look, it goes up, it eventually comes back down, fill it in. This one comes down, comes back up, fill it in. This one comes down, comes back to fill it in. Think about a paintbrush. Down, up, down, up. You know, like that's how it is. It comes down, we got to see it come back up. So that was my draw on liquidity up in there. So when it comes down, the algorithm just has sellers coming in. They need to have buyers in there. So the buyers then eventually work their way back in to get up into this range just to balance it out. Because the sellers come in, they need buyers. And that's my draw on liquidity. I look for a setup and I look for a pattern. So now in the lower time frame, so this area right here, down here, is where I'm looking for the entry at a key time. Market open was right here at 9:30, and I got in pre-market a position here a little after 9, and then another position here, and then that's when I got in a taxi to go to the airport to come back home from the Dominican. So I took the trade within here and here in my resort room, and then I was in a taxi. We got in a taxi, and then the target was hit right here of that 1 hour gap. You see that gray box there? See the gray box here in the 1 hour? And that was my target right there. And that's how I passed the test. Then there was another trade that happened. You can look at the 1 hour time frame. We come up higher, having a candle in the middle, and then we come down on the 1 hour here. We tap this fair value gap, and then we start to reject it. And after we reject it, we have to look for a market structure shift. There's the market structure shift right here. Then we start to test a fair value gap, and then we're reaching for this ultimate target of this high and also this high here, and that reached up into there. But my main target, my happy target, well, my happy trade, like the one I like to see, the ideal one, was this one here. Swept all these internal lows to come up, hit the fib level, hit the target, boom. And that's how I passed it. Obviously, there's a bunch of other trades in there that helped me get the account up farther, but that's just the general idea. We're looking for liquidity, we're looking for gaps, looking for the draw of where price can go, and then just target into there. If you need help with it, just reach out to me, join my Discord, whatever. But to wrap this all up, I mean, it was kind of like a mixed video about long-term investments and real estate and what price can like do in the short term and also in the long term and what we can expect. So basically, the market I expect to come lower if we don't get good data. But if we start to get good data and the Fed starts to say, okay, we're going to start slowing down our rates, we got to keep an eye on that. We got to really stay up to date. Once they start doing that, that's when I believe the market's going to start reversing and going back up higher. So that's why I'm dollar cost averaging all the way down, because as soon as they say that they're about to reverse, they can do it. Because think about this. You ready? If they tighten a lot now and hurt the economy, they can always start printing money to get it back up again. But if they don't hurt the economy now, things can get way worse and get out of control, and wages are going up too high, and then prices are going up too high, and then it's going to spiral out of control, and they don't have control of it anymore. So they need to knock it down now, so then like in the future they can reverse it back up when things happen. It's like a whole pyramid scheme. It just seems like the whole government and everything, Federal Reserve, it's all a pyramid scheme, but we need to be thankful for it. Like, I think it's great. It needs to be there, but it's a scam. It's just, as I get older, I'm 23 years old, and I didn't know this 3-4 years ago. Not even 2 years ago, I didn't even know this stuff. But I'm so thankful and grateful that everything I'm learning, it gets me ready for the future and what can happen next. There's a lot of potential out there that we can take advantage of to basically like make money, I guess, and also learn. But obviously, like I said before, not a financial advisor, but it's just something to learn. So like when you learn, you actually feel happier. So you're like learning and progressing. So you're either learning or you're dying. And in this, I think I'm learning. So just keep it going, and then we'll learn to like all succeed and just be happy together. You know what I mean? So take it easy, everybody. Love you.